What I would do actually is I would diversify my assets. I would buy the index. So I would buy the S&P and I would hold it long term. I would have a portion of my capital in crypto assets. Now, the only company that I have full faith in is my own, because I can guess with a degree of confidence what my ROI would be if I were to hire a new producer or editor.
Let's say you're hosting a dinner with Warren Buffett, Ray Dalio, Kathy
So
Wood,
I'm
Peter
hosting the
Lynch.
dinner and
Yeah,
they're
you're
attending
hosting
my
it.
dinner. Okay, cool.
I don't know if you're cooking or I don't know what your cooking skills are, but you're
I
hosting
would
the
not. I
dinner.
would not cook for Warren Buffett, but yeah, I get it.
Okay. You can only adopt the investment philosophy of one of the guests. Who do you choose?
Okay, boy. The U.S. stock markets are one of the few markets which have not had a multi-decade lull. The Intelligent Investor by Benjamin Graham, that is a good primer on value investing. Everybody is impacted by economic trends. If I can just influence the general public, as many people as I can, to think about those issues, and I think I've done my job.
David Lynn, thank you for coming on the Explain Yourself podcast. You don't need any introduction. We all know who you are, the host of the David Lynn Report. Previously, you were the anchor and producer for Kitco News. You have a finance background. I've learned a lot from you over the years. But just for the purposes of this show, can you please explain yourself?
I love the name of your podcast, by the way, Explain Yourself. I feel like I'm being interrogated for something wrong I've done. Like I'm about to explain myself. There's lots to explain here. But no, I kid. Great to be joined on your program. Thank you very much for having me. I'm David, and I run the David Lynn Report. I've been doing my own show since 2023. And like you mentioned, I was an anchor at another channel called Kitco before then for 3 years. Before then, I was a researcher, a macroeconomics researcher at a firm called BCA Research based in Montreal. So my background is in macroeconomics research, number crunching mostly, predicting markets. I was a generalist at the company, so I rotated around different desks. I did some emerging market stuff. I did a lot of US equity stuff, and I did some ETF construction in the last project that I worked on. Prior to that, I was a finance student at McGill University in Canada. And in my free time, I play music. So that's me in a nutshell.
I know you're a man of many talents.
Thank you.
I was an econ major, didn't apply myself in the way that clearly you were able to do. So kudos
I think
for you.
you're doing amazing now. You've kind of taken a different route from the traditional finance thing, and you've got your own, you've got multiple ventures going on. So yeah, you did apply your commerce knowledge.
Speaking of, I have some finance questions for you.
Sure.
If you had a bunch of cash right now, January 16th, 2025, where would you deploy it?
Yeah, I get asked this a lot. I have some crypto and Bitcoin holdings from way back, and I never really touched it. I sold a bunch in early 2022. Back then, I didn't really time the markets. It's not like I predicted a crash, but it just so happened it was the top. And I never really got back into capital markets more. I never really bought more. And the reason is I have my own business now. As you know, I'm running my channel. I have a team. I have a media organization. And so I'm deploying my cash into my business. I do have cash ready to deploy, and that's going to be used to hire people. It's going to be used to maybe up the salaries of my current staff, and it's going to be used to maybe acquire equipment or pay for travel costs if I need to work abroad or at conferences and whatnot. So basically 100% of my cash at this point in my career is deployed back into my own business. At some point later, I will start to diversify my holdings. So basically, I'll start to invest in other things besides myself. But the way I think about it right now, the only company that I have full faith in is my own, because I can guess with a degree of confidence what my ROI would be if I were to hire a new producer or editor and so on and so forth. I could estimate how much return I could get if I could buy a studio space or rent a space out. So I know exactly what cash flow I would make given a certain capex or investment. I can't predict with the same level of certainty what my return would be if I buy anything in the capital markets, despite how bullish one may be on anything. So for that reason, right now, I'm focused on expanding my own business with cash.
Is that part of the reason why you left Kitco? Is because some people think that having a job is like the most secure thing that you can do, but actually having your own business, it's kind of the most secure thing you can do insofar as you're getting a return or you're continually pivoting until it works.
I think that's a very good point. I think once you've reached a certain threshold of the business, it becomes more secure. But what's the statistic? Don't quote me on this, but I think it's like something like more than 90% of startups fail within the first 2 years. I'm
Yeah.
just reaching the 2-year mark now, so knock on wood. I've got 2 months left to not fail. But I agree with you that after a certain point, you do have a little more control of your own destiny, so to speak, because when you're working with somebody else, yes, your performance is obviously important for the success for your own career, but you're also at the mercy of management. And if management mismanages the direction of the company or funds, for example, layoffs could happen and it could be no fault of your own. So there's always a risk of losing your job, even if you work for a stable company. Now, when it comes to managing your own business, there are risks involved, obviously, but if you know your business well enough and you have relatively high confidence in how to run a particular organization, I'm not talking about just starting a startup for the sake of starting a startup. Those are called entrepreneur tourists, I believe the term is. You're a tourist in the venture capital space or the entrepreneur space. You're just making things for the sake of making things. Those companies don't really succeed in the long term. But if you actually know what you're doing, where you think you know what you're doing, and you have investors backing you up, I believe there's actually a lesser chance of failure long term than staying at a company, because you're capped on the upside if you work for somebody else. So to answer your question in short, in the first couple of years, the degree of risk is higher. If your business is still operational after the initial hurdle to start your operation, then I think you're probably better off running your own thing.
I'm glad you brought up that statistic. I don't know what it is, 95% or something of them fail. You're a math guy. If you continually start and you try another business when that one doesn't work, then the compounding effect, like you're eventually going to increase that percentage to actually potentially have a successful business.
Yeah, maybe if it's the same field, potentially you can apply the same lessons from the previous venture. But if you're somebody who is a serial entrepreneur in several different fields, unrelated to each other, then I would think of them as mutually exclusive events, meaning your chance of success for venture number 3 isn't going to be significantly higher than the chance of success for venture number 2. I don't know. I've never been in that position before because this is my first venture on my own.
I have some more financial questions for you. I know that you're investing in your company right now. Risk allocation is going to change with time based on your age. But what do you consider a good portfolio in terms of risk assessment?
That question varies depending on your age, your income, and what your objective is. I can only answer from my perspective because you're asking me. So what would I do? First of all, I am not a portfolio manager professionally. My guests that I interview are, and they know a lot more than I do. So what I would do is I would actually buy one of their funds, and or I would just invest passively, because I don't have the time and or knowledge to beat the markets. I don't believe managing a fund is very different from asking questions to fund managers. There's different areas of specialty. So what I would do actually is I would diversify my assets. I would buy the index. So I would buy the S&P and I would hold it long term. I would have a portion of my capital in crypto assets. I would have it in Bitcoin. I would have a portion of my cash in either the money market funds, lock in a yield, a currently higher yield than what it was before and a couple of years ago. I would have a portion in stable coins so I could transact with blockchain if needed. I could have that readily available. And then I would have a portion in gold, not because I'm a gold bug per se, but I believe gold is a good diversifier against equities. If you look at the performance of gold versus stocks, they've held a very loose, if not neutral, correlation with each other over the long term, which is to say stocks and gold are not very well correlated with each other. They don't really move together. What that means is that it's a good diversifier, and portfolio managers actually use this to boost their Sharpe ratio, which is their risk-adjusted return. By having an asset that is non-correlated, what you do over time is you reduce the level of volatility of your fund, thus increasing the chance of increasing the risk-adjusted return. So I would use that just for that tool. But primarily, I would be overweight equities because I believe in American capitalism. Over time, that has not failed us. If you look at the stock markets around the world, the U.S. stock markets are one of the few markets which have not had a multi-decade lull. The Japanese Nikkei, for example, peaked around the late 80s, early 1990s, and hasn't really recovered for 20 years. We saw that with the NASDAQ after the dot-com bubble burst in 2000. It took 10 years for the NASDAQ to regain its 1999 highs, but it made it eventually. If I were to just have something that could protect against inflation or wealth erosion or the deterioration of fiat over the long term, I would bet in American capitalism. I would put that in the stock markets and diversify into other things. So maybe 70% stocks because I'm more aggressive, 10% bonds, and then the rest split between cryptos, gold, and cash.
Let's say you're hosting a dinner with Warren Buffett, Ray Dalio, Kathy
So
Wood,
I'm
Peter
hosting
Lynch.
the dinner and
Yeah,
they're
you're
attending
hosting
my
it.
dinner. Okay, cool.
I don't know if you're cooking or I don't know what your cooking skills are, but you're
I
hosting
would
the
not. I
dinner.
would not cook for Warren Buffett, but yeah, I get it.
Okay. You can only adopt the investment philosophy of one of the guests. Who do you choose?
Sorry, it's Warren Buffett, Ray Dalio, and who?
Cathie Wood and Peter
Okay.
Lynch.
Okay. Boy. Yeah, they're all great investors in their own right. I think we were taught the principles of value investing in school, picking companies when they're cheap, running discounted cash flows on stocks, making your own assumptions on growth, seeing what the stock's value should be. And if the current price is trading at a discount to what you think it should be, that's a buy. That principle just makes the most sense to me. That's not to say Cathie Wood's ARK funds don't have a sound strategy for picking innovators. That's not to say Peter Lynch, the bond king, or Ray Dalio, who believes in managing risk, aren't great. I find Berkshire Hathaway's approach the most understandable for me. And also, we were forced to read The Intelligent Investor by Ben Graham, who was a mentor to Warren Buffett. So I would pick that if I were to choose between those four, simply because I understand his approach better than the others.
You have said that Warren Buffett, he doesn't invest in anything unless he can comfortably feel like he can captain the ship. And that's why he didn't invest in Apple. Do you feel like your risk profile has increased with time?
My risk tolerance has increased with my income increasing. Let's put it that way. Typically, your risk tolerance should be proportional to your ability to lose money. So you usually see pensioners and elderly people with a lower risk tolerance, but that's not to say that they don't have money. It's just most people who are retirees don't have a steady income. And so they need to preserve wealth, what they've already accumulated over the course of the lifetime, instead of speculating on very risky assets that may make them a lot of money, but also lose, most of their wealth. So I am in a position in my life where I have steady income through my company. And so if I were to lose all the money that I've allocated as a bet, I could still recover from that. As opposed to if I were to not be working anymore, I would be a lot more cautious.
You've interviewed some of the top in the world, but you also have a really unique perspective. So I'm just going to jump right in. The financial apocalypse. Tomorrow morning, you wake up and the world's central banks have announced that they're shutting down. The fiat currency system is collapsed. Everyone is bartering goods like it's the 1800s. What do you do first?
Call my mother, tell her I love her. This sounds like some Mad Max scenario that you find in the movie. Like if it comes to that, there's bigger problems to worry about than my investments, right? Okay, so let's walk through your scenario line by line. So central banks have collapsed, fiat currencies have collapsed. We're back to a bartering system.
Yeah.
For that to happen, there has to be some sort of war. Maybe there's like a nuclear outbreak somewhere, and we have no way to access our capital through financial institutions. We're back to, I'm going to trade my butter for your bread and so on and so forth. The first thing I would do is stock up in guns and ammo and canned food, because forget your Bitcoin, forget your gold, forget everything else. It's not applicable in this case. Stock up on oil, crude oil, necessities. And then in this scenario, people often say your precious metals and your coins will be your de facto currency, because you can't access your cryptos when the internet's down, when the grid's down. So what do? Do you trade with your precious metals and your coins? You could, if people accept it. But back to your original point, I think you've answered it. We're going to have to use bartering systems somehow. So you better stock up on things that people need. The first thing I would do is find a bunker to hide and get my canned food.
Do you think about that ever? What is it that worries you? You don't think about like these people who have like bunkers and worst case scenarios?
I think they're cool. I love to have a bunker to throw a party in, but I don't think we're at the edge of an Armageddon financially, and we're politically, and we're militarily. I think there's always going to be pockets of wars around the world. There's going to be geopolitical instability and some certain hotspots that are happening right now. But fortunately for you and I, we live, in North America, where the mainland of the US and North America is relatively geopolitically stable compared to, let's say, the Middle East or Eastern Europe right now. So unfortunately, there are still people that need to face this exact scenario every single day. And so if you're living in Gaza, for example, what do? You could, in theory, have a hard drive that contains Bitcoin, or you can just memorize your seed phrase and you can take your capital across borders if you're a refugee from, let's say, Eastern Europe. That is the new age of protecting your wealth or transporting your wealth across borders. If you're, let's say, moving from Ukraine, for example, you can't hop on a flight and take all your gold, but you could take your cryptocurrencies on a hard drive. But back to your original point, and it's not something that I think about very often, just by the nature of being lucky about where I live.
I've heard you call gold a speculative asset. Can you explain what you mean by that?
I don't, I don't personally think it is. I think I've asked that question several times in my show, whether or not
Yeah.
it is, just because over the last, well, actually ever since 2022, it's basically moved in tandem with stocks, right? And you can see how if you pull up a chart of gold versus the S&P, for example, it's gone down in 2022 and it's climbed back up in 2023 and 2024. It's reaching new all-time highs. And so if you just look at those 2 years, it just looks like a speculative risk-on asset. But by definition, I think it is a speculative asset. You're speculating on the upside. It just happens to be a less volatile speculative asset than something like Bitcoin if you were to measure it by standard deviation. So by definition, if you're not sure about its return in the next year, you're speculating on the asset. Because if I were to buy a bond, a treasury, and lock in the yield, I can know exactly what my coupon would be in the next 3 months. I don't know where the price of gold is going to be in the next 3 months. Do you? Probably not. So you and I are speculating on the asset. Anything whose return is not certain or has a reasonably high degree of certainty, for me, is a speculative asset. Gold just happens to be a speculative risk-off asset in the sense that historically it's performed well when there's been periods of very high inflation or periods of deflation or economic shocks, geopolitical risks, events that would prompt investors to go to safety to protect their wealth. Gold has done well in those types of environments, but still it's speculating, right? Speculative doesn't just mean it's volatile. For me, it just means the return is not certain.
Makes sense. If someone were just getting into investing now, is there anything that you would suggest that they do? Or is there any book that you would suggest they read?
Yeah, there's a few books that I've read that I really like and would recommend. So the first is the Market Wizard series by Jack Schwager, and I've interviewed Jack Schwager a couple times on my show. We studied his work back in school. I was a big fan of his books. So the Market Wizards is a series of interviews with America's top traders and investors. He's interviewed a lot of the big traders out there. Some of them I've even interviewed on my own show, Jason Shapiro being one of them. He started writing these books in, I think, the late 80s, early 90s, and he's written several books in this series, and he's updated them ever since. That's one. The Intelligent Investor by Benjamin Graham is something I've cited earlier. That is a good primer on value investing. Start there, I would say. And then how I followed the markets when I was learning about investing in school, I took a class called Applied Investing in college, which was a 2-semester course, and we were given actual money to invest. 21, 22 at the time. This was during 2011 when there was a debt crisis going on in Europe and markets were in free fall. Equities markets were down and credit markets were down as well. So that was a bad year for all markets. Our class came out on top. By that, I mean, we lost the least amount of money. Every group had 4 to 5 kids. We were given $250,000 of real money to manage. It was part of the school's endowment fund. We had a real broker that we were called to make trades. I knew nothing about finance or very little at the time. And what I did was simply just listen to the news every single day. I kept a journal and I kept track of the major events on the news every day. I just listened to Bloomberg radio and I just read a bunch of things on company earnings calls and whatnot. So I watched the news. I listened to Bloomberg radio. For the stocks that we're invested in, I listened to the earnings calls that analysts were, asking questions on. If I had the chance to, for these smaller companies that we had, I would get on the phone and talk to the CFO. They're very nice to talk to students. So, I just glued into the markets every single day. And over time, you start to see a pattern. Like, once a piece of news were to come out, like, let's say, war broke out somewhere, you would expect certain stocks to go up, like defense stocks and other things to go down, oil to go up. Like, as soon as a new piece of news goes out, I would have the instinct that, should probably buy oil or sell something else. So I think over time, read those books and just listen to the markets every single day, listen to the news, watch the news every single day. And over time, you'll kind of develop a sense of what you're interested in. That's my recommendation.
What about any of these alternative investments? I guess I'm more specifically interested in like small businesses, for example, investing in those or any other alternative investments. What do you think about those? And do you think that they're a good idea?
Alternative investments, like, people like art. That's one alternative investment.
I don't know enough about Pokemon cards.
What did you say?
I said alternative
Pokemon card?
investments. Yeah, like I'm not talking about, like Pokemon cards. That's more like a hobby that you can turn into like an investment. But I guess I'm more interested in the idea of people who are feeling like these boomers are going to start selling off their businesses. Do you think diversifying into some of those, potential assets are a better idea than a house? And also, next question, should I buy a house?
Okay, those are 2 questions. So I had a call recently with a viewer on my show, and he had an interesting idea for hedging against inflation, which is simply save money on your utilities. So what he did was he installed a bunch of solar panels on his home, and he had like a geothermal pump in his backyard. And I asked him, are your cost savings enough to offset the initial capital investment of, these things? And he said, absolutely. He said, over time, not only am I selling energy back to the grid, I'm also, not only am I saving money on electricity, I'm also making some money. So that was a creative idea to kind of hedge against the erosion of, fiat, is to save on one of the biggest costs for anybody, which is utilities. Things like that I haven't thought of before. It's not a direct, buy this and then it'll go up kind of thing. Real estate is a good form of cash flow if you're renting your house out. If you're buying real estate as investment, I mean, it depends where you're buying. Obviously, the cap rate could be different. But in Vancouver, it's probably not a good deal because the rent here isn't as high as some other cities, but the price is very high. So it really depends on where you are. I've asked this question to several real estate experts on my show, and almost unanimously, the question is, a home is what you live in. Date the apartment, marry the condo, or whatever the phrase is. But you buy it because you need to live in it, not because it's primarily an asset that you want to speculate on. And so should you buy a home versus rent? I think if you believe that over time, you'll make the yield on your home will be at least the negative yield on the cost, meaning if you take the annual cost of running a home, so your interest payments and your mortgage plus maintenance, taxes, whatever, divided by your initial cost, if you're making that back through capital gains, then yeah, you're basically living for free. So if you have confidence that whatever property you buy will not depreciate in value over the next 10 years or whatever, then yes, I think that's good, because over the 10 years that you're, again, living for free, if not possibly making some money back.
Going back to gold and silver, what stage do you think we are in the bull run?
Let me give you the consensus view on my show, and then maybe I can offer my own insights. There's a few traders who think that we've reached the top for now. Some long-term holders of gold would make a narrative for why it's going to above $3,000. Based on the consensus expectations, I would say we are near the last phase of this current bull cycle. And I don't know when the next bull cycle will start or what that may look like. I think we would need Fed easing, aggressive easing, to start the next cycle, which probably won't happen this year because the Fed is already signaling that they might put a pause on rate cuts, or at least won't cut as aggressively as, as some may think last year. But anyway, I think we're at $2,600. Consensus expectation on my show has been $3,000, $3,100 by sometime this year. So yeah, the gold's already up more than 30% over the last 12 months. I think we've got another 15, 20% left.
So I'm obsessed with businesses and business growth. I'm curious where you see yourself in 5 years or 10 years with the David Lynn Report.
Long term, I want to build a fintech company, not just a media company. Building an audience and recognition and having a network. And I love the media side. I'm going to keep doing it until I can't talk anymore. But that isn't the only thing that I want to do with my business. Eventually, I want to develop financial technologies that may assist the audience. So for example, I'm working on this app idea, and it's in the early phase of conception, where people can search for financial information they want using large language models. So instead of like typing in certain filters, you just verbally say what you're looking for, and it'll produce the chart. It'll produce whatever it is, and then it'll link to my media channel. So let's say you want to search up cars. It'll give you everything you need to know about all the car stocks. It'll link to all the recent interviews or articles on my site that have been about cars or, car companies. And it's a one-stop shop for information. Eventually, it might even evolve into a trading platform. Who knows? So I want to develop that side down the line. For now, that's in the next 5 to 10 years, 3 to 10 years. But for now, I'm focused on growing the media side. I want to expand that content format. So instead of just interviews, I want to do like a nightly show where I recap the news. I want to make the community a lot more interactive and start a community for the site, and maybe even sub-channels for other content verticals. So right now, it's just expanding the media side.
That's cool. I like your idea of giving some video context to any other content that you're building on your app, because like even into the cryptoverse, like people don't really understand a chart, and sometimes I'll link a video that will kind of go into more depth on like what it means, or even just your commentary would be really helpful.
Yeah, absolutely. Yeah. And into the cryptoverse is it's a great tool. So people should check that out.
I know. Yeah. I know you talked about it a lot. I appreciate that. So what do you think if someone is growing a business and they're also trying to either preserve preserve their wealth or grow their wealth. They don't have a lot of time like you because you're doing interviews and, you're growing your business. Do you think that it's a good idea to work with someone else who's managing your portfolio? Or do you think that it's a good idea to have multiple people, one of them who's very high risk, one of them lower risk? I speak to a lot of business owners and they run into this issue all the time. They just don't have time to do their family and their business and also manage.
I think, first of all, you don't need a pool of securities to diversify. For the average retail investor who's not institutional, you don't need 40 stocks or whatever the textbook number tells you to be to qualify as for a diversified portfolio. You just need to have a small basket of things you know well if you're going to manage your own money. So suppose you're a doctor and you know the pharmaceutical companies very well. You know what they're doing. You know what drugs they're coming out with, and you know that thing inside out better than most portfolio managers in the street. Then just stick to buying those stocks that you know very well. And over time, your knowledge will pay off in spades. If you don't have any specialized knowledge in any one particular field, buy the index. If you know certain things, if you one of the lessons we were taught in business school, buy things that you like because you'll be more inclined to learn more about those things and follow it on a regular basis. If you don't have time to follow company financial information or do your own diligence, then hire a professional. I think that's a general philosophy I have in life and for everything, not just investments. If there's something that somebody else can do better than me, I'd rather outsource that to a professional than try to attempt it myself. So bottom line, if you're really, really knowledgeable about something, buy that something, whatever that is, or sell it, whatever the case may be. If you don't have time to look into anything, don't take your own money as a way to make mistakes and learn from it. Just hire a professional.
Okay, I have one last question for you.
Sure.
It's 50 years in the future, and you're looking back at the David Lynn report. Your work has shaped the way people view money, markets, and life. You have all of your fintech set up. You have your new website. Everything's working together. You have your communities I've described. What's the one lesson that you hope people learned from everything that you've done? It could be about, risk or the way that you structure your life, where you put your focus. Why is money important?
Let me tell you one of the pivotal moments that I've experienced that inspired me or prompted me to do my own thing. So I was at a conference in Dubai many years ago. I don't know if you were there with me, but anyway, there was one of these fintech conferences that we were attending in Dubai. This kid from Spain, 15-year-old boy from Spain. Yeah, it was Spain. And he comes up to me and says, I watch your show every morning before school. In my head, I thought, really? I didn't realize teenagers are into finance. And then his mother and his family was there. And he said, yeah, we watch your show every morning before we send him off to school. And now he wants to go into university and study finance. And then I realized, okay, my commentary and the work that I'm doing has more of an impact than simply giving investors, professional investors, an insight into what to buy and what to sell next. We're also educating the young and inspiring them to learn more about finance. If I could influence half the people on the globe to at least learn more about finance or read more about economics or learn more about money, not necessarily make them Bitcoin experts or stock experts or, experts on hedging against inflation or monetary policy experts. If I can just influence the regular person, the majority of the population, to at least think about how to manage their own money or think about the economy, which is an aspect that affects every single person within that ecosystem, whether or not you're a doctor or a dancer or whatever your profession, everybody is impacted by economic trends. If I can just influence the general public, as many people as I can, to think about those issues, and I think I've done my job. That's my ultimate goal, is to inspire as many people in the world to just think about the economy.
Well, you're brilliant, David. Thank you so much for coming on and sharing all of your wisdom. I'm going to be checking out a lot of these books that you recommended, so I appreciate it. And I hope that you come back again. Can you please tell us where we can find you online, on your socials? What should people be following?
Yeah, I had a lot of fun, Dana. So thanks for inviting me. I'm happy to come back anytime. The David Lynn Report, you can look that up on YouTube. It's called the David Lynn Report. And then you can also find me on X at DavidLynn_TV. I also have a newsletter. You can go to thedavidlynnreport.com to find that.